Hey everyone, what's good? What is good? What's happening? Gary, buddy boy, how's it going? What's happening with you, mate? Quite a swingy day in you yesterday, actually. Yeah, I mean, this is just, well, it's not really what I was about to say. Normally it needs to reverse off some form of inflection point, but you've got there and then it's reversed off. Not the cleanest, to be honest. You're not really bidding that. Yeah, let's see if we can look at the amount of liquidity up here. That's crazy. Ghost Algo still there. 150, 100, 150. It's actually changed a little bit now. Yeah, but there's a chunk up here that needs to be filled out, and then we maybe revert back into VWAP. So we'll see what happens. Nice, mate. Yeah, I got hmm, done about two hours ago, roughly, give or take. Some real size coming in now, eh? Wow, this is more like it. Tons of absorption there on the offer. I want to see them sweep previous day high though. Up all this liquidity here, sweep it, and then revert back in, which would be nice. So we've got previous day high up here at 92s. So it's here. So we sweep this, clear out this liquidity, and then let's see what's on the cards. Yeah, certainly more action, mate. That's for sure. Here we go. Someone should be banging this. The offer is just aggressively pulled at the minute. See that minus 500 pulled. So they should pop. Someone should bang this here and then take the stops above this last swing point. They're trying to hold it up. Yeah, it's never. I mean, it's a completely different product from trading it, mate. I find continuation. It's nice when you've got bigger ranges like this. Um, Volume is definitely picked up. Definitely picked up, which is good. Now that we're out of August, July and August are always shit months, to be honest. So you're not really ever fading this year until it sweeps above. Tons of two-way here though. Let's refresh the delta. So you can now see the offer is stacking ever so slightly. So you want to see them punch this through there if it's just to go long. So, Gary, it's just the lack of volume, mate. July and August are typically the lowest volume summer months, so there's never really as much oomph. Like it doesn't run as much. I mean, I know there was a couple of days where the volatility was crazy where the VIX happened, but that's more of a more of an outlier. And you can instantly see on the DOM right now, there's just more volume in the inside prints right now. Some more size trading. Yeah, the algo's on holiday. Still here, this one. Still here. It's further away now. So basically, whenever the VIX drops, it goes further away. It's just a volatility range capping algo that is there to distort the book. Um, so yeah, they're just now pulling bids. So you see that. So we'll see what they're going to do. I wouldn't, if I was ever to be taking a short here, I'd want to see this pop above here first. Because all the guys that were long here, this gives them a chance to get out up at this level. Let's just draw the rectangle what I'm talking about. So of course, so roughly like here. So this is an important level, and very typically people that are long, they're going to want to bang it through here and fill out this liquidity, and then the bid will just pull, and then hopefully should work our way back to VWAP. Failing that, then they go up to the high session up here. But we'll see how it plays out. Tons of two-way here though. Tons. I do not compress the DOM. No, I've tried a few times on Sierra. I probably should. It just kind of messes up the volume profile and stuff when compressing. Um, and it is a little bit more reactive. I mean, look at that. We're showing 165 on NQ, which is a huge order for that market. We weren't seeing that in August, that's for sure. We're very close here. Just need someone to punch this and fill this out. There we go. Little puncharoo. Instantly absorbed in the offer. Like 1,000 contracts just instantly absorbed there. Are you guys in any trades? Are you still looking to take any positions? If you guys are just watching, say hello. Let me know how you're doing. It's good to see some volume come in. So the plan is here, they've essentially just literally ticked the high here. You can see them planting all these orders. So there's two options. We go up and retest this high, or we basically now just fade back in and the bid gets pulled, which you can see is happening. So that's really the two options. Really, we can be looking to fade this back into 80s. Let me clear inside prints. You want to see the offer thicken up a little bit though. At least it's on sim, mate. That's the main thing. There we go. There's the bid pooling now. Let's see how much they can drive it right back down. Be nice to see some clean flows come in. You know, where the market's actually moving with size rather than bids and offers been pulled, which it's been doing for the last couple of months. Just been moving by 1 and 2 lots. No real size coming in. I think your problem is recognizing valid divergence and correlation and trying to scalp 6 ticks. Do you get any tips? Dan, how's it going, buddy? What's happening? So, Gary, I would say, you know, just because you see numbers and pulling and stacking and stuff happening, it doesn't really mean it's tradable. And that's the thing, you still need to pick out your levels. So let me get the pen out here. Pen, pen. Yeah, I'll show you what I mean. So I'll explain this in a quite a simple way. So for me, once the market pulls in a level, so say for example, it drops down back, pulls back. You're never taking any positions at VWAP. I don't really do that, but you can if you wish. And then you're really looking to see when the market does hit this level, right? You're looking to see a break. So you need to be right extremely quickly when you hit this level, because it breaks right through. There's going to be tons of stops below here. So that's your breakout idea. And then when the market is ultimately hitting highs and swing points, okay, you need to then make the decision, are you going to be fading this back into value, or are you going to be taking the continuation? Now, this is a Tuesday, no real news happening, nothing to really change anything. So most likely, people that were long from, round about this area, from here, 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 they're going to want to start liquidating their positions up at these points. And if the offer stays pretty thick, then likely we'll just work our way back down to the fair value for today, which is 80s. So what I would say is, when the market's at point of control, no bueno. You're not touching any of this because the market can do whatever it wants down here. You're looking to take trades at areas where likely shit is about to happen pretty fast. You know. So like when the market gets to here, it normally will sweep the level. You need to then watch what's happening in the inside prints and on the offer, right? And then very typically, if you hit into the bid, then it should go pretty quickly. Then you want to see things like this. The offer is being stacked aggressively while the bid has been pulled right now. And also then you want to check things like correlations, like NQ is also working its way down. Also helps bonus points if the Russell is doing the same and the Dow at the same time. But until the market gets and does this sort of sweeperoo of here, right, of this area, because it's the previous day high and overnight high here, you're not shorting this. And it's gave you a little bit of a sweep where we'd had all this liquidity up here that we were discussing. The market lifted into it and instantly absorbed 1,000 contracts. Then we were saying that this could potentially go down the way. And then you just want to see the bid pulling. So because the market can go down one of two ways. It can go down with just there being no defense on the bids or some aggressive size happening. Now, I would say that when the bid has been pulled and there's no real aggressive selling coming in, I would say you're not as enticing to hold the trade than if aggressive selling is coming in. Hopefully that makes sense. Because ultimately, if the bid has just been pulled and no real selling is coming in, once they thicken this up, the market will just go back. There's not that much aggressive selling. And you're probably saying, well, how do you know there's aggressive selling coming in? Well, you can just quickly look at delta. So the delta is still positive right now, which you can see here. So these plays, when you're taking these, you're really only looking to take something like your 6 to 10 ticks. You don't need to do that, to be honest, once a day. If you're hitting that with enough size, you don't need to be making a bazillion ticks. You know, 10 ticks a day keeps the sheriff officers at bay. That's the thing. Or the wolves from the door, or whatever is a way to look at it. Hopefully that makes sense, mate. With my little doodles I was doing. Alex, what's happening, buddy? How is it going? And just as another sort of thought for this as well, I am really not a fan of taking the second sweep. I prefer the market to come up, sweep the level, and then it gives me, the say the 10 ticks. If it goes back up again and sweeps again, it's more than likely that you're going to have a stop run because the people that were actually shorting in here, they then need to become buyers if we break above here. So you don't take the second one, only the first. Not saying not saying that taking the second one is always going to result in failure. I just feel that over time I've done this that you get a higher probability um, of taking the first. Mm, 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 mm. Hello, Samar. How's it going, buddy boy? What's the expectations? So expectations here where sweep of the previous day high and overnight high, and then revert back in a little bit. How much we revert in, I've got no idea. But if we do take out, I can't really, I should, let me do this. So if we do take out this level here, then the next stop is going to be the high. But until we faff around down here, the more we faff around below this level, the more likely we are to go and revisit here, this level. So we'll see what's going to happen. No real expectations, not really predicting where the market is going. We're just trying to see what's going to happen in the next 10 minutes or so. Vic, how's it going, buddy? Vince, so I use the Globex and extended trading hours for the current day. So this is the whole day's volume. And then from the previous days, I only use the regular trading hours. The reason being for that is because there is just so much volume in the regular trading hours that I really only care about that, to be honest. And the reason why I have that is I like to pay attention to overnight high and overnight low. So they're important levels. And very typically, the shape that you've got today so far is a bell curve, right? So very likely the market wants to go back to the bell curve. You know, it's just a standard distribution that you've got here. You know, and very typically the market wants to somewhat finish somewhere in this area here. So that gives you the premise where you want to be fading these levels back into the point of control or the fair value for that session. If you have a profile that's like this, where it's just literally straight down, then you're not fading. Vic, yeah, exactly. So technically, if you were still in this trade, um, you'd still be in it because when you get in this fade, so the key. Let me try and zoom in a little bit here so you can see it. Maybe helpful if I remove the bubbles. Let me remove the bubbles a second. Remove. No, let's hide so I don't large. Okay. So the exact level here is the previous day high in this level, so the market has swept literally here, right? And we were discussing this. The market gave a big lift in it and filled out the liquidity, and we absorbed 1,000 in like a minute, which is this level here. So market swept here, right? Just a little mini stop run, and then you've had this pop down. That's your trade. Just a little sweep, and then your pop down. If you were looking to hold this back down into this level, well, your stop is going to be above here. Because if the market goes back up to this level that we've got marked here, then you don't want to be in this trade. Because if it does, then likely we're going to go and test this level up here. So that's effectively what I was saying. So you need to be pretty quick to these things. And you need to really pay attention to inside prints. Yeah, it's the middle of the range, yeah. Which is typically where the fair value is going to be. Concerning your window down left, which you just explained, are those volume and market profile? This is market profile. This is a monthly profile that you're seeing. So this is the monthly volume that you've got attached to the right here. So you can see where sort of lower volume areas and higher volume areas are. But this is a market profile. So like now, for example, this is now a second hit of this level. However, we've got NQ popping, Russell popping, Dow as well. Everything is lifting off the main line here. So if we do crack this level, we should see a pop. And then notice all this liquidity up here as well, which is interesting. So likely everyone that got long in here, they're going to want to try and target up at this area. And then we then just have a little sweep back down is the plan. Not saying that this can very easily just sweep back in now, but don't take the second one. The first one's always the most probable, to be honest with you. I took the high, okay. Wait, we're all the way up here. Oh, really? Wow. Gosh, I wasn't paying attention to that. Still seeing a lot of two-way here, though. I mean, 545 absorbed, but tons of two-way. And see, there's still sellers are still hitting in here, and buyers are absorbing right at the high of this range, which is the last thing you want to be seeing if you were still short here, to be honest. Because if they do pop this level, there's going to be a blip, and then we're approaching above the value area high, especially when NQ is ripping above up to these levels. There we go, there's the pop. Vince, I do use time and sales, mate. I would say if you're going to do that, you're probably better using some order flow stuff. I'm going to do a video about time and sales and order flow, things like that to assist. Um, July and August was pretty pointless for time and sales. There's no real size coming in. There was just one and two lots. I mean, if you are using your time in sales, I was just going to say if you want to bring it up, but it's too much information for everyone. So your time in sales typically you want to have um, one to show you the speed of tape and one to show you the actual large size coming in. It's typically what you want to see. But during July and August and stuff, it was just tons of one and two lots, maybe the odd 25, 30 lot coming in. There's very rarely like huge size coming in. But you can instantly see in the last week or so, the volume is just picking up now. So you guys in any positions? Are you thinking of taking any? What you guys thinking for what's going to happen? Okay, so the next is the literal high of session. So we're not too far away. Look at all this liquidity up here, ignoring the 100, 150, 100, and 150 because that's part of the cloud algo. But we've still got loads of liquidity up here that likely will have more size behind it because it's been sitting there for ages. So let's see if we get there. And like right now, if you were to come up with a trade idea here, you're really looking to buy into this. You're not fading this until this is filled out, as an example. But to be honest with you, with me over the years, if I trade these ideas, typically they just pull the bid and then I'm offside. So I always just prefer to sweep. Sometimes if I get a little bit feisty, I'll take a breakout trade in ES, but it doesn't happen very often, to be honest. Because this is what happens. You just look, they just pull the bid, and then you're instantly offside like 8 ticks. Do you know? So you're always just the easiest trades I've found on ES specifically is when you're basically just fading back into value, but it has to be on specific day types. You're in short since the lunch break. Wait, what? You're in short by wait, did you not close an order or something? Danny done for the day and replay mode doing some practice. Nice one, mate. Very nice. You can easily see how the market reacts when they start pulling bids and offers. That's why the combined pulling and stacking is pretty handy for you to see. But yeah, they do that quite a lot. You can see that Delta is just continually grinding up at the minute as well, which is not great. If we do get up to like maybe 12, 15k, it kind of helps for a nice fade back in for the market on close, because typically a lot of those positions need to get closed out in the delta. We can maybe close out like 5 to 10k of that delta, which gets for a nice mean reversion back into 80s. It's a burned account, so let's see what's going to happen. Oh, what you? Whereabouts are you short from? What do you class as like what? Like lunch? Like 2 hours ago? So were you short from like VWAP or something? Like, eesh, that's not great. Max, how's it going? What is happening, dudes? What's occurring? I quite like it when it just goes parabolic like this into level. Look how much the offer is pulling at the minute though. This is why you just never, I don't know, you never fade till the sweep happens up here. How's your trading go today, mate? Max, what's happening? Below VWAP, jeez, oh, wow. I know, the only way I think you're potentially getting out of this one is you're going to have to average, I think, if you've got any drawdown left. Yeah, I'm good, mate. I'm good. A pretty chilled out day today. Couple of trades on the 10-year. This morning I was doing a little bit of trading on cable and the euro dollar. Throw some currencies into the mix for a change. And currencies really, really move by bids and offers being pulled, like extremely. Such an algorithm-driven market, the 6E and 6B. When you look at it, like everything is layered like 100 lots, and you really need to pay attention to, of course, inside prints and just what's been pulled. Liquidity is kind of low for my strat. You wonder. What are you trading on? Are you trading on you trade the 30 year, don't you? Yeah, I didn't actually check that too much today, mate. I had quite a short session. Are you talking about the inside print's been lower, or are you meaning the bid and offer is a bit thinner, like drop from 1500 down to like maybe 900 or something? Is that what you're meaning? Because that's quite common on the 30 year at times. Yeah, so that happens, mate. Um, Typically in summer months, of course, like it's just thicker because the market doesn't move as much per se. So they layer the bid and offer more on bonds so they can just pull it. But this is the thing, mate, is as I keep on saying this all the time, like the DOM gives you an idea instantly on what to expect for the market, and when you get really familiar with the markets that you trade, you'll notice over time how the bid and offer thickness changes and what impact that has on your trades, which very typically it's a slightly different nuance that you need to incorporate for that because the algorithms are incorporating something different. The hardest part for us is because typically we don't vary your size very much. You know, you're not really trading more than what, I mean, if you're slinging what, 10, 15 lots tops in bonds, it's nothing realistically. Um, Whereas if you were, slinging 15 hundreds, then these changes make a big difference to you for how to execute the positions. So the algorithms have to change when this happens. So it really changes the sort of state of play. So I don't really know when it'll come back, mate. It just changes. This is just how the market changes. Sometimes some months the 30 year gets thinner, sometimes it gets thicker. Just need to have a slightly different playbook for when that happens. Well, that's why I typically trade the 10 year, mate, because it's the thickest. Um, and sometimes I'll trade the 30 year. If I'm looking to trade any news events, I'll typically hit the short end of the curve because if a number comes out and it's way out of whack, then the short end of the curve reacts the most. So you've got more room to, like, say the number comes out that's really good for bonds, for example. So you instantly lift, and the 5 year and 2 year go more because this the shorter maturity. So that's part of what I do. Um, for if I do take any news plays. Correct if I'm mistaken, a buy day, at the end of the day, there will be orders flushing. Yes. However, you need to notice and pay attention to the delta, mate. So really, on a big buy day, you want to see, like, this is, despite us actually going, just completely straight line here, it's still not actually a buy day. We've not even broken above the initial balance high yet, and we're 7k delta. For a big buy day, if you were like 15, 20k delta, and you get to a key inflection point, normally you're going to find that some of that delta is going to close off before the end of the session, which will give you a nice opportunity for the market to revert in. Because that would then mean that if it was to stay at, say, 20,000, that would mean that there would be a lot more buying open interest carrying over, which typically doesn't happen. Like 95% of orders are typically closed out in that session. So the market will most likely at some point here revert back in down to like 88s and 80s, I think. I mean, I've not checked what data's out tomorrow and Thursday. I probably need to do some more prep on that, but um, if there is data coming out tomorrow and Thursday, it even gives you a better idea because no one is going to be start blasting, the market to go all the way up here. If there's data to come out tomorrow that may change the sort of status quo. And you see there's a little bit of negative delta starting to come in now. So let's see how the market handles that. If it's going to be absorbed or we're going to pull in now. So we've just broken above the value area high and then pulling in. The shame you miss being cautious, like waiting for these sweeps. You miss out in some trades at times, but I would rather be more selective than take the positions because as we said before, you take it and you're instantly offside 6 to 8 ticks. You need to be very precise with your entries. As you make money on your entries, no problem, buddy. Inflation tomorrow, right? Okay, right. So there's if we end in a ridiculous spike and would be quite surprised for that, to be honest. CPI tomorrow, then I take it. Yeah, it'll be fireworks tomorrow, then, mate. Yeah, well, I think they're already pricing in the data. We really need to pay attention to, of course, these CPI numbers that come out, but the labor market's the main focus for the Fed at the minute. Is it's if it comes out and it's a lot worse, um, then we might see 100 basis points cut by the end of the year. But it really depends on the labor market and of course inflation. That's the two main things that we're watching, but more so the actual job numbers. Because if there's not any more jobs available and unemployment rising and everything along those sides, um, then they really need to start cutting, to be honest. And most likely the Fed is never like ahead of the curve, like they're just not. They always leave things. They always leave things too late. They should have raised interest rates way, way, way before they did. They hiked too aggressively, left that too late, and then they're leaving probably the cutting too late. To be honest. Yeah, I'm definitely thinking a short is going to be great here. And how's it going, mate? Reels, important things to look on the DOM. Okay, first things first, just to get this out of the way, you need to just because you see the what's in the bid and ask and inside prints and delta and loads of cool numbers and stuff and offers been pulled and things, but it only becomes relevant when it gets to a key level. Do you know what I mean? Because otherwise you start seeing things. Do you know what I mean? And so you need to have your key levels. So say for example, right, we get to this sweet point here, okay, which is the highest session and initial balance high, and we're approaching standard deviation bands, of course, which shows you it's out of whack, and we're in a balanced day, and there's CPI tomorrow, right? So with an educated guess, the most unlikely probability is that we go to the absolute moon here, right? So if the market gets up here, up into this level, most likely all of these guys that bought all the way up here need to start becoming sellers because they want to get out. So they'll be either layering the offer, which is shown here, right? They're layering this price as an example, but they'll also be getting out of market as well. So if they see tons of liquidity sitting on the bid, they will hit into the bid and market to get out of their position as well. And then you want to see when it gets up to this level, you'll see tons of buying into the offer, which is going to be here. There'll be tons of buying in here, and you'll see the market not move. And then ideally, you want to see the bid start to loosen off. By loosen off, I mean they start to pull the bid. And then you want to see some fresh delta and fresh selling start to come in, and then the market to then start to pull in. And you also want to see the same on NQ because these guys are like brothers, you know, they move in tandem with each other. The NQ is like the wild one, you know, it will lead, it does all the crazy stuff, you know, it's the one that, you know, there's too many wild parties and loses its marbles, so you need to keep an eye on what it's doing. Right, okay. So CPI is the main number, to be honest, that's coming out. The one that's most watched. So for that made sense, reels, you need to first identify your levels, spot absorption, note your pulling and stacking, check what the footprint is like as well. Sorry, not the footprint, the volume profile. So if you're not noticing what's happening on Delta, then you can see just the real step in the profiles that are happening. So you can see here, there's nearly 5k here, 3k here, 3k here. When you get up to here, there's like 1200. So the market's been up here before and instantly rejected these levels. So there will be stops up here. There will be people that will have stops up at these levels. And this then provides the liquidity for these guys that bought here on the buy side to get out of these positions. And then the offer will thicken up. We'll probably dance around for a couple of minutes and then the market will pull in. Now, are you going to take this all the way back down here? Probably not. I prefer to take these and then, you get out for your 10 ticks, or if you get 20 ticks, you fist pump and clap there, typically. Nice. So no trades at POC. None of that. Yeah, so typically the market obviously moves in two ways. So it moves with sheer size and it moves by just no defense on the offer. So this is the thing you need to train your eyes. Algorithms these days basically layer every single price, right? So every single price is basically indifferent. It's pretty much the same as poker. It's called game theory optimal. So what they try and do is they try and make things appear indifferent to each price. And then when the market gets to those prices, they start pulling and cancelling the orders. But they're not going to show that because then that gives away the hand, right? Because what you need to realize is, just as an example, the guys that are absorbing on the offer, once the bid goes away and it just cancels, the market will go away. And very typically, it's going to be the same firm that's actually layering the bid at the same time. Nice. POC for targets to exit. Great stuff. Great stuff. That's the way to do it. No diddle around here, man. None of this. Don't take any trades off there. Because why? Because you will literally sit there with your knob in your hands waiting for the market to do something here. You know? You want to try and take things so you're not holding it forever and then you start praying. You know, it's the last thing you want to do. You want to try and time it, so that it gives you the quickest route to success. And you want to see some size coming in the favor of your trades, and you also want to see the opposing side to your trade basically cancelling, like now. So 500 here, stacked on the offer. You can see this starting to pull as an example. So this is something you'd want to know. I'm not saying right now, I'm just meaning in general. Because that means you're probably getting an extra 3, 4 ticks out of that, because if some size comes in, this will likely just cancel off. These will. So it's just a couple of things you need to be noting. No problem, matey. Hopefully you leave a comment on them. Let me know your thoughts. I need to put out some more videos for you guys. It is just very hard to say the same things twice. And the trouble as well in terms of editing them, like I don't know if you've guessed, I'm not an editor. So, if I don't do them in one take, maybe at most I can throw in like another video into it, but that's the extent of what's happening. So if I can't do it in one take, then it's quite challenging. It's much easier just to chat off the cuff. People ask questions, you know, I can run through different things. I'm not one for giving you cinematics and memes while you watch trading material. We're not 10. But sadly, as the YouTube world goes, I probably should be doing that. You know what I mean? Um, no books, mate. No books. None of that. Just the eyeballs. Plenty of time. Plenty of new keyboards and new mice. Plenty of pain. It takes years, mate, to get. The number one thing I can say to anyone is if you need to get good at managing risk. Like, I can't emphasize that enough. That is literally it. You know, everyone when he starts trading hates losing. That's just how it is because you get set back and then you feel that you know you've done a number of days work to go back the way and it's the opposite of like how everyone does when they do something that's involved with money or reward. No one likes to regress. So, but this is the thing, you need to get accustomed with this not being a normal setup. You need to look at it in a sort of wider um, basis, so like a month to month basis or a quarter to quarter basis. So when you look at it that way, then managing a risk for this individual trade should be the main goal because if you manage risk every trade really well, I can guarantee you that your quarter end is going to be good if you get really proficient in managing risk, because the green trades will take care of themselves. Typically, for a lot of traders, it's the they've got no problem putting up green days, but then they wipe themselves out with like 2 to 3 losing days. Um, and if you typically are having these big days, but then you lose loads on red days, you need to think about maybe going for something a little bit more consistent where you're not winning as much, but you're also not losing as much. We're here for consistency for long term. You're not here to, you know, make thousands and thousands a week, you know. Exactly. It's the exact same like riding a bike, um, anything along those lines where the longer you do it, you just get like an intuition with it. And I know that everyone, it's the most classic cliche saying, nothing beats screen time, but it really doesn't. You can see the bid was pulled there. Look at the amount of size it's just traded. Literally nothing. 22, 53, 30, 35, 82, 6. Bid's been pulled. Let's see if it can continue to crack through. And we can see there's a little bit of size starting to creep in here. Let's see how the market takes it. Someone is holding this price. See the difference? 177 there absorbed on the bid, whereas here, nothing. Someone's holding that price of crack through. Let's see if we're going to continue through. Bid has been pulled. Let's see if we can get a little swingarooski down here. Time is it? We've got an hour till the, well, 43 minutes to be exact, till the volume to come in. Dan, I have used them in the past. I prefer to set them on both RTrader and with the broker. So, um, give your broker a bell and say, I've got a tendency to be a potato, so can you hard stop me on this loss amount per day, please? And your broker will always oblige that because they want you to be in the game. It's not CFDs, so if you're trading futures with the broker, then they want you to be in the game because if you donate all your money to the market, then they don't make any commissions because they are not going to be they're not b booking you. It's not CFD land. So I would probably advocate if you're going down with a futures broker, mate, that side, just give him a bell and tell him to put a hard stop in. Or if you're using, depends what clearing you can use, you can go in and set it on there. The reason I would say so, because if you're having a really bad day and you're just in one of those moods, you can reset Sierra. Um, but yeah, you can use them. Whatever is easiest for you, man. That's the main thing. I just know that people in the past, um, you know, they have a tendency to do these things. I was meant to be a smiley face. Certainly shouldn't give up my art career. Came close once, and my commissions took me a very long time. Nice. Yeah, it's just trying to put the precautions in place because like you never know. You're only in trading, man. You're literally only as good as your last trade. So this, I never really understood the sort of euphoria, winning X amount of trades and doing it. Like you're literally only as good as your last trade. So you need to always treat it like that. You have a random distribution between wins and losses, so you may just be on a good run. So the losing side can always be around the corner. To be honest, they should bang this here. Should be a little poparoo if they can break this iceberg at 98s here on the offer. 600 absorbed in the offer at 98. If they can crack this, there should be a pop. It's like the last little mini line of defense. And we're not right now. So 400 absorbed, then 160 hit back in. So someone is loving that 98 at the moment. Let's see if they continue to defend. Samara, are you still in that short? Look how thick this is in comparison to what it was before. This is just, it's good to see some volume back in, you know? 600 absorbed here, 582 here, 600 here. There's definitely some size coming in, which is nice. Some directional flows for a change. Yeah, it's definitely been. It's just nicer to see some more size trade. That's the thing, rather than the nonsense that we've seen the last month. August never an easy month. We should see a pop through here if we do break it. Look how thick the offer is as well. Just every tick here. It's like every tick is an iceberg on the offer right now. Hopefully it goes well, mate. Fingers crossed for you, dude. I know it's just not cracking, is it? Just not cracking. It seems to be a lot of the time when the market does this, where the offer will absorb tons, then it'll pull off like 4 or 5 ticks, bid will reload, then they'll just pull it off for a couple of ticks where it was from. Does all this size up here, and then you trade through prices with like 15 contracts and stuff. So they're definitely defending these areas. I mean, look at the amount of size that's come into the offer, and the market's not moved. Thousands of contracts into the offer because we've been saying um, most likely that's going to be there's so much buying all the way up here, right? You know, so these guys need to start. getting out of their positions. Because I mean, we've had like probably 15k of delta from the bottom, maybe give or take, if that was negative on the session. So they need to start working out of there. They just pulled that there. There was hundreds on the bid and pulled. Yeah, it's definitely looking to go back into balance, James. It's just hard just to try and, you know, the hardest part is actually picking the position because they can very easily drive it up to this area here to get out, and then most likely will drop back down. But again, they've shown tons of absorption here. It's just how aggressive you want to be on these positions. That's the thing. The aggressive entry is going to be here, like in this sort of range, you know. But the idea that you don't really want to see the market breaking here, and then we sort of pull back in down to this kind of area down here, down here is the sort of plan. But that's definitely the more aggressive entry. Um, because I mean, look, it's been here now for like 40 minutes in this area here, you know. So you need to think to yourself, like, why now? You know, and we need to see a little bit more sellers, a little bit more selling delta actually come in here, which we're just not seeing. So all the buying has been absorbed in the offer at the minute, but they're not aggressively hitting into the bid very much. So they can absorb all they want, but if they don't start selling into the bid, it's not going to do anything. Do you know what I mean? Eventually, then once this offer gives way here, we're then going to pop above. Like once whoever is iceberging, these three ticks. Once we actually start to see like a good couple of thousand delta come in and some size come in, then this will go down, but it's not happening right now. Is that an hour and a half? Just shows you how my potato brain is looking at that. Just to see every single tick right now, it's effectively an iceberg. So they're really, really working this offer. Again, 600 here, 386 here. So if we do punch this through, let's see what happens. All this liquidity, 400 here, 400 here. Wow, how thick this offer is, man. That's crazy. So the buyers are really having to punch to even get a tick right now. I mean, this is as clear as day, right? I mean, look at the amount of buying here. Right. So we should be popping up here. Let's see how the market reacts up at this level when we do pop. It's not exactly the pop I was thinking of. It's like the grind of death. Tell you, see, once this bid cancels, this is going to capitulate once this cancels here. Yeah, exactly, mate. Very tough. So I think for me, Vic, I would be wanting to see this, how the market reacts up at this level. Um, but this is just so much absorption in the offer right now. So idea is we sweep this level where I've got this rectangle drawn somewhere in here. We see tons more absorption and the bid cancels off. Is the plan of attack. I'd be pretty annoyed if the market gets here and literally doesn't sweep and then pulls in, but you're trying to take like entries where because if you get in a short now, more than likely the majority of the time they're going to sweep the level, and then you're just taking a sort of aggressive entry for the sake of it. You're better waiting for the sweep to happen, and then the bid to start cancelling. Then you get in, your stops defined, um, and then the trade should be working pretty much instantly. Should be the plan. But the key is to note how the offer reacts when it does punch through here. So you want to see the same behavior. You want to see again all of this absorption, and then notice how the bid is extremely thick right now. So any selling that's come in, the market's ticking down a few ticks, and then just lifting aggressively into the offer, but the offer is fighting back. And you'll notice when the market does pull in, this bid will just cancel. Because remember, there's like 100 contracts each price right now. When the market trades in, they will just cancel off and it will start trading through these with like 30, 40 contracts hitting through. And it should happen like really quickly. So again, this is all about your sort of risk appetite with how aggressive you're looking to be on the trade. Technically, you're kind of chasing the short a little bit here, and you probably need to give it like 15, I don't know, maybe 15 ticks or so up to like fives because the market can bang through here up to like fives to this kind of area. Because this is the thing why you need to wait. The market can go here, it can go here, and really depends how much they bang it. Because you guys know the amount of times you watch the stream. Sometimes they will hit it like 6 ticks. Sometimes they'll bang it to the moon all the way up here. You just don't really know. It depends how the offer reacts when it does get here. So that's why like preempting this short now is definitely aggressive. I mean, if I was trading like an evaluation or something and I wanted to pass it really quickly, I'd probably just enter short here, and short here, and then just pray. I'm only kidding on. But yeah, if you want to pass these evaluations and stuff and you don't want to trade them for a month, you need to start being really aggressive with your entries and stuff. Otherwise, you're there for weeks. It just really depends how you want to do it. But yeah, look at this. This has been 10 ticks of just extreme buying. Nicola, yeah, power hour. So happening in 20 minutes, we'll see some real volume. Okay, here we are. Let's see what happens. The market should pop above here. Notice how every single tick, the offer is still there. NQ is going as well. You want to see that pull in. Delta's off the page. Now you need to start be thinking to yourself, okay, this is the type of behavior you want to see. Offer still really, really thick. This bid needs to start cancelling, and you want to see a little bit of negative selling actually start to come in, because this should flip on a dime. Notice how the bid has just started to pull here. So you want to see that continue to happen, and the offer now needs to start continuing to stay thick, but they need to start hitting in and showing some aggression. for a long time, mate. I've been trading now for I think over 10 years, mate. Okay, we need this bid to start cancelling. Seeing a little bit of negative selling starting to come in now. I want this just to capitulate now. Wow, it started really young. Jeez, oh mate. Well done, buddy. See, the bid is still there, which is not great, despite the offer being really thick. We need to see that. You need to see this bid just disappear. Aggressive is still stacking the bid right at the high. Look at the amount of size here in the offer. This is bonkers at the high. This is the thickest I've seen the offer, I think, in 2 months. Okay, so we're seeing the Russell and the Dow is selling off. We need to see NQ pull down a little bit here, and then we want to see this start to come in because there's been so much absorption here. Let's see if we can get a pull in. Keep your eye on NQ. It should be like down here. You know, NQ needs to get down like here. Okay, here we go. See if NQ can continue dumping here. We need this bid to start disappearing at this level. They're still defending here and here. Here we go. Right, this should now not be returning. This should now not be returning back up. The crack this level is the last iceberg. We want to see this continually now go first line back to previous day high. Let's see if we can get there. There we go. Yeah, exactly. This should be going. The bid is slightly pulling. There's a little bit of aggressive size coming in, but mostly for the bid pulling. They're still absorbing here. You need to see this bid cancel more like this. You don't want to be seeing 280 absorbed in the bid. So you broke this. So if you're in the trade, you really don't want to see this. Let me get rid of this. In fact, I can just draw it here. You don't really want to see the market come back here now because they broke this iceberg on the bid. And now you just want to see this gradually just pull in now. So if your stop is there, then you're basically moving your target to here, and then you just let it kind of see and just let the order flow. Note the value area low, sorry, value area high is just coming up. There's going to be a little mini battle here potentially, but you should just see it gradually pull in now. Note this 250. You want to see sellers aggressively hit this. Let's look at this huge iceberg. Wow. You want to see them smash through this. It's a huge iceberg in the bid at this level right here. 766 absorbed in the bid with this behind them. If they crack this, this will dump. Still absorbing on the offer. So the new level here. If they crack this, then you move this down to here. If they do crack this. And someone sneeze into it. Okay, let's see if buyers take this out or if this is real here. We want to see this be a real order to protect the offer. Yes, 364 here. Okay, nice. Right, you need them to hit it here and then we need to see a dump down. Still defending. Thousand contracts absorbed here, by the way. Not fantastic, but this is like a line in the sand. If you do crack here, then this is going down even more. Okay, now I'm going to recenter. Rid of all my crazy drawings. Okay, so this was the iceberg level. You want to see this be protected. You want to see the market continually pull in. Look how much the bid has been pulled here. So you want to see that continue to happen, and it's not. So this happens and it's not just aggressively pulled in, you know, no bueno anymore. You just need to get out of this. Otherwise, if you want to just hold through this, but if it does go back up to your level up here, then you're out. You know what I mean? So you can just sit through this. It just always depends. But when you're taking this trade, you're getting like 15 ticks out of that. That's the way. And he timed it pretty well. We were saying with sweeping this level gives you the best entry. So you can see, but that shouldn't be happening. It's the last thing you want to be seeing. It should just be coming down. We've got 9 minutes to the volume comes in, so anything can happen in 9 minutes, to be honest. And then we've got 15 minutes of some real size coming in. We've got 13k delta at the moment, positive delta. You want 5.5. Jeez, they're just really pulling that bit there. You see that? Just absolutely no defense on these ticks right here. Are you guys holding any shorts at the minute? Or are you out? Yeah, super tight, mate. I mean, this is the thing. It's basically, you got in, probably at ones, one or twos, and you're basically hoping for a bigger move. Otherwise, it's just a break even. I mean, they had what, maybe 10, 15 ticks on the table. But for me, I would rather see that have, already gone, to be honest. At least the previous day high there, which is a bit wishful thinking considering, the next 6 minutes is where the action is going to happen. But it could in the next 6 minutes, we could just see a flush start to come in. But we'll see. It's not great how you're seeing the bid still absorbing here. At least now the icebergs are like plentiful, and there's some size coming in, which is good. Not like this one and two lot nonsense continuously, or just no size whatsoever moving the market, which is very hard to read in my opinion. Like this, once you get proficient at this is like a giveaway, when I mean this is extremely obvious when it starts to absorb this much in the offer, right? That I'm to spend so much money just to drive up 5 and 6 ticks and stuff. Oh, you're out, John. Did you take that short? Did you get in at all? Hopefully you got like 10 ticks or so, give or take. Yep. Now it goes without saying, uh, anything can happen now. This is why you need to be, extremely proficient at managing risk. The market, if this was to go down there, shouldn't have returned here. We broke this iceberg and then it went bids and then the offer just pulled and basically we went straight back up. I don't know about you guys, but I'm just not holding this, to be honest. we should be away down here. Should be easy peasy, but it's not happening. So clearly the buyers want to take it a little bit higher at the minute, faff around above here. Because in theory, I mean, how much more, how much more absorption does it take? Do you know what I mean? And this is where, for me, over the years, going for like 15, 20 ticks is the tops because there is nothing worse for me than say you get in like here, right? Roughly this area. You know, it gets down to like this area and then you watch it come all the way back. It's brutal. I'd rather just take that in, chalk it off, you know. And if you leave some on the table, you leave some on the table, you know. Typically, or you're trailing your stop really tight, to be honest with you. Hey, Patachi, how's it going? Hey, where exactly did we open here? Like right here? You mean open RTH open? Yeah, potentially. Wow. Here we go. There's the there's some of the delta starting to close out. Let's see if we can continue on. That was some action there. Wow. I bet you there's people that don't know that this happens at 10 to 4 and they're like, what's going on? You know? And then they just get caught in that. Like they probably buy up here now instantly they're praying, you know, and then the market actually pulls in and then they bought up here, you know, when the market was just up here. I can imagine that happening a lot. Okay, so approximately 14k delta. Let's see if we're going to close any of it out. So what do you guys think? What do you think's on the cards here? We're certainly closing out some delta at the minute, some size, a little bit of size coming in, but the market is absorbing every single bit of it right now. And everything is popping. Now we have 5 or 6 minutes till, well, 5 minutes for the exact volume to come in. So let's see how that goes. It'll be interesting to see in 4 minutes if we can really correct here. We're currently at, let's see the exact amount of delta. So 16,000 delta right now. Still look how thick the bid is though. Mm. Really nice to have ES back like this actually. It's much more refreshing to really see some real size trade in the inside prints. It's very nice. Okay, 1 minute or 30 seconds. Still absolutely plowing through the offer here. 2,000 on the bid stacked. This is madness. See if we're going to pull off. Here we go. I think James is right. We could literally finish where we opened. Let's see how much delta we can close off. Finish exactly where we opened. Is that what that is, right? Like here. Look at that, up and down continuously. Classic ES. So what do you guys think about the close here? I mean, we're pretty much all she wrote. We might correct in down to like 98s or something. Thanks, Jamesy boy. No problem, Vic. Glad you enjoyed it, mate. The hardest thing about ES is, in my opinion, is knowing and timing like how much they bang it. So see when they do sweep a high, right? You never know if they're going to sweep it by a tick, 5 ticks, 15 ticks. You never really know. But they're obviously there becomes a point where it's no longer a sweep, right? And it's a continuation through the level. So, there's a lot of telltale signs sweep, and this is what I continuously mean by like the sentiment you need to know, just what day type you're in, you know. So why we were saying this, and when I'm talking about a sweep, I'm not talking about this happens and needs to go all the way down here. Because you're scalping, right? You're just trying to take, well, for me at least, I'm just trying to take like 15, 20 ticks or something, right? On these types of trades. So you should be in and out of them in like 5 minutes, to be honest. And if you do get it where it bombs and it does go back there in like one swift move, then happy days. Um, but some of the telltale signs you'll see is if you rewatch this, you'll see that round about these kind of levels, there was so much absorption on the offer. So the buyers were having to basically spend tons of money just to get it up a tick. I mean, it was a point when we got to like here where every single tick on the offer was an iceberg. Just tons were hit in and absorbed. So that shows you that there's intent on the offer on the limit side. As we were saying, the first hit of this level initially was when you got a little pull back and sweep enough, and then the next hit is when it breaks the initial or the highest session, but you then get this pullback here, which we're talking about here. And then after that, if you want to take this, then so be it. But you need to get quite precise with the entries, and there's a lot of different conditions you need to look out for it. But you only really need to do that once or twice a day, and you're good to go. That's Sierra trying to do things. So let me know if you guys are getting our questions. No problem, guys. You have a great evening, and we will catch up. Let me know if you get our questions before we let to call it, as we're just going to faff around here, as nothing else can happen for the next 40 minutes. Market is pretty much closed. Glad you enjoyed it, Vic. No problem, buddy. If you guys want to rewatch anything or watch any of the videos, leave any comments and ask any specific questions that you've got. Also, tell your friends, tell any trading buds you have. Try and help me get to that magical 2,000 number. We're getting pretty close though, guys. We've got like 1,650 subs now, which is great. It's not actually taking us that long, really. I think we've been on YouTube now for like meh 3 months or so, 3 4 months maybe. And you guys need to let me know in terms of some content that you want to see. If you want to go into Discord and post in the video roadmap. As I would say, it's very hard to say the same things twice. I find it's easier to do it on lives than it is to, sort of do all the videos. But I do appreciate that you kind of need to do the videos as well. But yeah, just let me know if you guys have got any thoughts or what you would like. Miranda, no problem. No problem, mate. Well, I continue to do these lives. Sometimes, I ideally prefer to do it when the market is a little bit more directional, per se, like this type of action is, there's in the market's a bit thicker because it's easier, it's easier to discuss and, it's not really much to discuss when the market's in a 15 tick range, or probably even less, like 10, what it was the last couple of weeks at sometimes. But yeah, I'm glad it's provided you value, mate. That was really the main reason for creating the channel in the first place. Because you know, I must admit, YouTube is just full of it's it's just full of nonsense, honestly. I mean, if you go on YouTube, you know, people would make you think that if you use support and resistance, you'll be a millionaire. You know, and realistically, when this is the thing about order flow is, I really think in order to use order flow, you need to be a critical thinker. Because you need to be thinking like a step further ahead of the game rather than just charting patterns. So that's why some people never really get to that, to be honest. Um, it's kind of like a sort of deeper understanding and sort of better learning of the market, to be honest. Yeah, that's a good idea, mate. I think that could be a good one to, that absorption that we've seen there. That was a very good clear cut example. Um, when you see that. But the one thing I can't, um, the one thing I can't explain and it just comes with time. Is things like, it's a Tuesday, right? There's data tomorrow. Um, we're in a balanced session. Monday here was pretty balanced as well. The fact that the CPI and PPI data coming out, the market, you're trying to make educated guesses here, right? Because you're never going to be right all the time. Anyone that says that is telling you nonsense. So you're trying to think what's the most probable solution that can happen, and just the more time you put into this, you realize that if the market is giving you a distribution day like this, where it's basically like a bell, most likely the market is not going to finish like this. So you've got this sort of behavior here, right? Just as an example, the market's coming up to the high of session up here as an example. It's very unlikely that we're going to finish the session like a way up here. Normally, you'll finish, you know, round a bit here and a bit here, this kind of way. So a lot of that just comes with time and experience, and the sort of sentiment for the session as well, which you just get that by repetition and practice, to be honest. But I suppose you need to understand order flow concepts and what you need to look for in order to understand, because that's the thing. People will come in the stream and they see loads of DOMs and stuff, and they'll probably be like, "All right, I must be taking a million trades a day." I really don't. It depends on the market I'm trading, of course, but just because you see the inside prints and the market reacting in and now, um, it doesn't mean there's an edge. And for me personally, I want to be in and out of trades, as quick as possible, and always to manage the risk that's on the table, to be honest. As the old saying goes, the longer you stay in the casino, the higher probability you're going to lose. And I kind of take that as the exact same concept as the trade as the market as well. Now, of course, there's going to be, just by the law of averages, where you'll take a sweep here, so you'll short it, and then the market will just absolutely dump. That's going to happen, but that just when that happens, the other types of trades that like make your month. But your objective is to just try and take your sort of 15 ticks or whatever the market is giving you. I think you should be taking no less than 10. Again, depends on the range of the day and just how it's going. But yeah, just loads of little things you kind of build up over time, but it takes a while, to be honest with you. But glad it's providing you value, and it can kind of shorten your learning curve is the main objective, man. Well, this is exactly why um, I find it extremely difficult to, a couple hours of trading where you're watching DOMs and really analyzing the market, where there's acceptance, where there's correlations, is the bid and offer been pulled, just the host of different nuances around it. You're exhausted after it, and I don't know how I couldn't do that and chat and do everything. I like to basically have order flow coming into my ears as well. I've got wires on, and you're really focused for a time, and you need obviously plenty of coffee and plenty of water, and you need to take a break every now and then, but certainly not more than 4 hours a day can you do that, in my opinion. Otherwise, your decisions get poor, and you end up just saying, "Ah, screw it, I'll not manage risk accordingly," or whatever the case may be. Um, but yeah, this is where I think streaming on YouTube and executing trades, like, it's fine if you're just if you're doing this, if you're streaming charts and this is what you're doing. I mean, it's not exactly very taxing, is it? Do you know what I mean? It's very, very straightforward, to be honest. You know, you're literally just watching price. So just something I think you guys need to bear that in mind. It doesn't, because I've been doing this for many years. That it doesn't get any. It gets easier with your knowledge and like just understanding different conditions and different cycles and things. But like your mental capital that you have for the day never gets better. Like that's something you'll do. So you need to establish your trade window. You make the most money. You need to just be aware of all those things and be really present all the time. Like every trade matters. You know, you need to be really selective. No problem, chaps. You guys have a great evening and we'll catch up tomorrow. Safe trading. Peace, everyone.